You grab a ton of CO2, put it on a capital stack, wrap it with protection, and turn it into cash flow and fist bump. This is the headline number, $12.3 billion. Last year, when I stood on this stage, it's only $6.2 billion. This is the cumulative contracted carbon removal credit purchase. In just a year, it has doubled. Jim Mann, which is the CEO and founder of Undo, the carbon removal company focusing on enhanced rock weathering.
Taking the natural rock weathering cycle, water falling through the atmosphere, dissolves CO2 as it falls, so your CO2 is now in liquid form, forms a weak carbonic acid, and that will react with basic rocks. As that happens, it captures the CO2 as bicarbonate. Once that makes it through the water system into the ocean, it's permanently stored. We take the basalt rock, we grind it up into a fine powder. We spread that across agricultural land. So we've now got a much bigger surface area, and we've placed it in an environment where you have a high CO2 concentration, 10 times the CO2 in the soil that there is in the atmosphere, a high water retention. This speeds up the process 50 to 100,000 fold. So we're taking an existing quarry that's already extracting rock and crushing rock, existing haulage fleets, existing spreading infrastructure, existing farms.
But of course, we're not here to talk about the technology. What we care about is the asset itself.
Microsoft is a take or pay contract. It's straightforward, if we produce it, they pay. It's watertight from that perspective. That's so important, obviously, in predicting your revenues. And then you get to the other side of it is, are we going to deliver? We've actually managed to ensure the delivery risk on this one to take another layer of protection away from Inlandsis to get us that next step and prove that predictability out a bit further again.
Find another person, do it together, grab a ton of CO2, put it on a capital stack, wrap it with protection, turn it into cash flow, and fist bump. Yes, I'm Lydia Chen. I'm the founder of Secure. I found myself translating and building the language for climate assets so that they can be understood by the capital market. Today, I'm very excited to tell you a climate story, from a climate story to a credit story.
Hi everyone, this is From Climate Story to Credit Story, making emerging climate assets eligible to structural capital. I'm going to hand over to our speakers who are going to start the panels.
Today, I'm very excited to tell you a climate story, from a climate story to a credit story. I'm Lydia Chen. I'm the founder of Secure. I spent the first chapter of my career doing a lot of things that people are busy talking about here. How do I translate a pool of exotic assets into the language that capital market understand? And nowadays, I found myself doing something very different. I'm translating and building the language for climate assets so that they can be understood by the capital market. I believe this room doesn't need to be convinced that climate matters, right? Thank God, because I prepared a completely different set of talking points if you say that you want. Now that we all believe that climate matters, so the question more is, how do we underwrite these assets? And that is why I'm having Jim Mann here, who's the CEO and founder of Undo. I'm going to bring Jim in shortly in just a moment. But before I do that, I know what you all care is a big number. So this is the headline number, $12.3 billion. Last year, when I stood on the stage, it's only $6.2 billion. This is the cumulative contracted carbon removal credit purchase in the past 5 years. In just a year, it has doubled, almost doubled. But I'm sure you can see the gap here. The delivery is just around 3% of the entire contract. And of course, we all love to see a great blue chip name here, Microsoft. But Microsoft, as the biggest single buyer, 78.5%, is in and of itself a curse and a blessing, because no market can be built by around one single buyer. The good news is we can see more and more buyers coming into the market and getting into carbon removal purchases. Usually, when people in climate talk about 1 ton of carbon removal, they care about the impacts. They care about how permanent the removal is. We're not talking about greenwashing. We're actually removing 1 ton of CO2 from the atmosphere. I know that people in this room, if we put a ton of CO2 removed here, first you cannot see it because it's air, but you care about the cash flow coming in. So we really care about the assets. So the same carbon credit can be read as a climate claim or the exposure that capital may or may not be able to underwrite, which is why let us make it real. Jim Mann, which is the CEO and founder of Undo. Undo is a carbon removal company focusing on enhanced rock weathering. So today we don't have the rock, but we're in Barcelona. We're not too far away from the sands on the beach. So I'm going to pass it on to Jim. Tell us about what is enhanced rock weathering? What are we really looking at? Just imagine that we are all 8, right? Have no idea what it is.
Thank you, Lydia. Very simple process that we're taking. We're taking the natural rock weathering cycle, which is water falling through the atmosphere, dissolves CO2 as it falls, so your CO2 is now in liquid form, forms a weak carbonic acid, and that will react with basic rocks. So things like basalts that you find all over the world. And as that happens, it captures the CO2 as bicarbonate. Once that makes it through the water system into the ocean, it's permanently stored. This is happening over geological timescales. What we do to speed that up is we take the basalt rock, we grind it up into a fine powder. Think of the sand on the beach, very similar sort of size particles. We spread that across agricultural land. So we've now got a much bigger surface area, and we've placed it in an environment where you have a high CO2 concentration, 10 times the CO2 in the soil that there is in the atmosphere, and a high water retention. This speeds up the process 50 to 100,000 fold, and it brings benefits to the farmer. So it adds nutrients back into their soil. But the real secret to this, compared to other technologies like direct air capture, is it uses existing infrastructure. So we're taking an existing quarry that's already extracting rock and crushing rock. We're taking existing foliage fleets, existing spreading infrastructure, existing farms. So it's repurposing existing assets to get the job done, basically.
Yeah, using the oldest technology provider, which is the planet itself, as a starting point, I think it's a brilliant move of enhanced rock weathering. What you're actually doing is to enhance the process. Something that needs thousands of hundreds of years, millions of years to be done, can be done in a short amount of time and really help us here to remove the CO2 from the atmosphere. But of course, we're not here to talk about the technology. What we care about is the asset itself. If I hear it clearly from Jim, at the end of the day, the end product is the certificate that you're selling to folks like Microsoft, Google, and these blue chip companies. But if you're looking at an exposure, it's actually the chain beforehand. If you look at a day in life as an ERW carbon removal credit, the rock is sourced, crushed, applied on the farmland. How long does it take for it to weather, and what's the steps afterwards?
Yeah, so typically we're looking at the first credits being issued about 18 months, 12 to 18 months after the rock's been placed on the ground. So that's the first point where you can actually monetize the process. And that'll go through to, depending on the minerals, maybe 10 years. So you've then got effectively a stream of these digital assets that you can sell out to our customer base is typically blue chip. Microsoft's our biggest customer, British Airways, McLaren Racing, Barclays Bank, a range of large companies tend to be the actual off-taker.
Yeah, this is great, because if we translate to the language that these people understand, it means that your cash flow is from these blue chip buyers. And this is the real asset that we're looking at. I believe you've come across this question a lot. The most basic one is actually embarrassing, very simple. What is the assets? So you've explained this to buyers who want to buy the carbon credit. You've explained this to lenders who want to lend you money to be able to fulfill your obligation to generate the carbon credit. What do you find yourself explaining again and again?
Yeah, I think to buyers, they understand a ton of carbon removed, and they understand how long that's stored for, so the permanence, the durability. The bit that they struggle with in this is we're open system. So we don't actually ever hold that CO2. It's passing through the soil. So it's the measurement. The measurement's always the key for the buyer. But we have very different conversations with the financier. So they're very much thinking about the delivery risk. What is the risk on this not actually happening? And at what point does that delivery risk start to reduce? So how confident can they be that they're going to see the digital asset generated, and therefore, ultimately, they're going to get repaid, which is the key.
I want to double tap on this point, like, what is the first risk mitigation in the chain of actions when we're talking about a day in the life of a carbon credit?
Well, it's right through the process. So we did a huge amount of work trying to get this bankable. Mm-hmm. And we ended up rebuilding not just our entire software stack to be able to make it traceable at every step, but actually our entire contract stack as well. So A lot of people start with the off-taker. They start with Microsoft as the off-taker who's going to actually fund this, and they think that's the difficult point. In actual fact, we need to have certainty on the asset. The asset starts for us at the quarry. So we need an offtake with the quarry that has penalties. You know, we need the quality of that mineral has to be at the right thing. So we think like a mining company in that first contracting step. Every step where we're moving it, in terms of the crushing, we want to know it's coming at the right particle size. That can influence how fast we're going to get the credits. So that's contracted. The haulier is contracted to give us the data. We need the data so we can do life cycle analysis, which are critical part of the chain in what we do. Same with the spreading on the fields. We need the data. If we don't have the data, we don't have the digital asset. We need to know from the farmer that we own the asset, that they don't have any claim over that asset, and that they are legally able to let us spread that mineral on that ground, so we don't have any problems there. So this entire contract,
there's different milestones
important.
That's important. Yeah. I think the first risk mitigation point is that you spread the rock into the ground. Because no matter what happens afterwards, it's going to take its effects.
That's right. That's the key point, is that we've got the right mineral on the right ground and it's actually been spread.
Yeah. It's as difficult as it can seem, but I want to bring this climate story to literally a credit story to the people who understand this CREDIT. I'm going to spare you with all the acronyms, but I always start from counterparty. We have a counterparty here who's generating the carbon credit. You have counterparty who are buying these carbon credits. And how are you going to ring fence these assets, and how do you set up the entities so they actually can work? We've set up for these people who are here with us to do a mini underwriting exercise. So if you can put out your phone and scan the QR code, I wanted to understand what would you need first before lending against a carbon removal offtake. I'm also going to vote. So far, I'm the first one who has voted. Oh, I can see that there is a clear winner. Does anyone want to share their thoughts? Please. Cash flow, cash visibility. From my screen here, I can see the clear winner is 4 votes about tenor and cash flow visibility. Yay! This is why we have the visibility to first talk about the asset. The asset is the cash flow. And I'm not going to stay at theory forever, because Undo actually, it is a perfect case study for this. 2 years ago, at the end of 2024, they did a first proof point deal with British Airways and Standard Chartered. So I spent my first career in Standard Chartered. So as a proud alumni, I'm happy that they're setting something as a first of a kind for the markets. And I'm going to ask Jim, what did you learn from this first deal with British Airways and Standard Chartered?
We learned a ton of stuff. I think the biggest single thing was it was a four-way deal. We'd got a broker involved, we'd got Standard Chartered, we've got us, and we got the off-taker British Airways, which made it just really complicated, a really difficult deal to do. I think we also learned that controlling the process was really important, and not letting everybody else just tell you how it was going to be done, because then you end up with the two sides of the equation who have different conflicting things that they want, controlling the process, and you're in the middle trying to say, actually, this isn't going to work. The other one was risk, teaching them about risk and helping them to understand risk. And communicating that risk was really important. I think the easiest way to describe that is probably in the next deal rather than in this one.
Yeah.
But it was very complex to get them to understand what the actual risks were and to go deep enough on something that is deeply scientific if you're not careful. And we had to simplify that and surface the risk to them in a way they could understand.
I think this is when I first come across ERW as well. It's just difficult to understand. But fast forward to today, you've already done another deal, which is an 8-figure deal that basically used Microsoft's contract as a collateral with a credit fund, Inlandsis.
Yep.
What has changed since end of 2024 till the time that you finished this deal? And what is the unlock there?
Yeah, so I think there were 2 key things changed in the market that made it easier for us. Firstly, the standards have settled a lot more. So we're being measured against a standard that we know is not going to change. That really helps in terms of predictability. The other thing is we've been operating longer. We are better at predicting when a weathering is going to happen, when that's going to result in the data that we need, and when we're going to therefore be able to generate credits. So the predictability's become better. But the thing that really helped with this deal was our understanding of the process. So from that first deal with Standard Chartered to coming into this, we negotiated basically 95% of the contract with Microsoft whilst also talking to Inlandsis while looking for the right fund, but being very clear with them what risks they would be underwriting and what they wouldn't. So being able to find the right partner who was comfortable with those risks. And in this case, actually had a scientific team who could go deep enough to understand it in a way on that scientific area that they needed to, whilst being comfortable with the other bits. And then it's at the end, only in the last 5% did we bring the Inlandsis in. We gave them the contract that was nearly completed. We didn't sign it, we waited. And Microsoft were a great partner, really good partner in trying to help us get this across the line and helped us in that last 5% where it became a three-way negotiation.
I think what's important is when we talk about the cash visibility, what is the cash visibility here? You mentioned something that early on you worked with Microsoft and the lender together to get a really, really watertight contracts.
Yeah, I mean, Microsoft is a take-or-pay contract. And whilst that might sound straightforward, you know, if we produce it, they pay. A lot of contracts, particularly these multi-year carbon removal contracts, have various get-out clauses, various things they could use to escape. All of that was closed down. There's no way out of it for them. If we deliver the carbon, they must pay. So it's watertight from that perspective. That's so important, obviously, in predicting your revenues. And then you get to the other side of it is, are we going to deliver? So is delivery risk going to be there? We've actually managed to ensure the delivery risk on this one to take another layer of protection away from Inlandsis to get us that next step and prove that predictability out a bit further again.
Yeah, so as a lender, as Inlandsis, who's willing to understand the science and work with you at the beginning, they're actually, I could assume that they're taking a premium by investing in such a deal, whereas the risk that they're taking is calculated risk.
I think that's fair to say, yes. Yeah. I think, you know, these early deals tend to be expensive. It's the unknown risks that they're trying to cost into there. But as predictability becomes better, as we demonstrate the track record, and as it goes project by project, we're seeing it become, one, a lot easier. People understand what we're doing, and two, a cheaper to finance. And I think that will continue to happen.
Yeah, I think it's a good time to look forward to the future, because this is not a climate space, so people don't know what Undo is. But I know that Undo is one of the rock stars, literally, in the carbon removal space, which starts from maybe British Airways and Standard Chartered was a very, very small proof point. And then you have the Inlandsis deal, it's an 8-figure deal. And you mentioned that you're working on some 9-figure contracts at the moment. And what do you see, let's say 2 years, 3 years down the line, we'll come back here. What kind of conversation you want to have with people in this room to help you finance further, to standardize the contract, to make it repeatable, scalable investment opportunity?
Yeah, I think we've done a huge amount of work on standardizing the process. So the registries who issue the credits, in theory, set a standard. And they do set a standard for the carbon removal to prove that a ton's been removed. What they don't do is standardize all the process points before that make this repeatable, scalable, and therefore de-risk it. And that's what we've focused on. So all of our software tracks it cradle to grave, and it tracks all of the contracting right through there. So we know we've got that asset, ownership of that asset, and actually the legal rights to that asset as soon as the rock hits the ground. That means we've got effectively a pre-issued ton that we can be highly confident will be converting. And it's turning it into that asset at an earlier stage, at a point where the risk has been removed, that we believe will get this to scale, and by standardizing it. Because ultimately, this is going to be relatively small projects, you know, tens of millions of dollars in a project on an annual basis, but it's not going to be huge projects. They're not billion-dollar projects, each one of these. So trying to get them into a standardized format that pools them, that enables finance to then come in over the top, to get that money back out to project developers is going to be the critical thing. And that's what I really want to now start to deeply understand.
I want to double tap into, you said that these are not huge projects. Each one of them are not huge. Each one of them are tens of millions of, but if you build a platform around it, that would be the number that people are interested in.
Exactly, and that's what we're doing. We already have project developers now working on our platform. So using our standardized process from the start to the end. And we'll start issuing credits on that probably early next year. So we'll have the first project developers who are using all of our processes, all of our software, and it's all going to be absolutely standardized, and with the legal rights of those contracts transferring to us until such time as they pay back finance. So
yeah, I know that Undo's vision is to remove 1 billion tons of CO2
per year.
per year.
Yep.
And that translates to how big of a size?
Well, we're typically selling credits at $300, $350 a ton, and I don't see that going down by much. So we're potentially looking at a $350 billion market. I need serious capital.
That's serious capital and very good vision for the future. I would say before we do that, we need to first understand this at a smaller scale, do it in a really watertight way, and design the structure so we can actually finally tranche the air. I've been thinking about this question a lot in the past few years since I started my company. Today, when we're looking at even Undo, it's still possibly a single loan logic. But we all know that how do you build a blended structure and eventually build it towards a traditional, mature type of capital stack. I don't need to repeat because everyone here is like a magician who knows how to do any type of funky deals. The real question is how much we understand firsthand before other people get onto this $1 trillion investment opportunity, which I think the people in this room have a good chance. And I want you to have something to take away from. I have this carbon financing fist bump. I tried to teach people last year. This year we've perfected. So this is how it works. I'm going to demonstrate it once, and please do it together with me. You grab a ton of CO2, put it on a capital stack, wrap it with protection. Here you throw in any type of protection you want to, and turn it into cash flow and fist bump. Okay, I want everyone to stand. Okay, it's time for lunch, please. Like, now, let's do it together. Find another person. Find another person. Do it together. Grab a ton of CO2. Put it on a capital stack. Wrap it with protection. Turn it into cash flow. And fist bump. Yeah, I fist bump with you.
Right.
Yes.
Yeah, then I did too.
I love this conversation. I'm so grateful that you guys chose us instead of food or coffee. If you want to continue this conversation and to understand how to actually make climate asset, if you have working on any type of climate-linked assets, I would love to have a conversation off stage. You can find me here. I'll be here the whole 3 days. This is the type of conversation we're building at Secure. You can also join us in the next Carbon Removal Breakfast Club. This is our flagship event in 2 weeks in London Climate Action Week. We welcome all the climate curious people. I think as long as you're curious about climate, you're one of my people. Just join us in the Breakfast Club and we can continue this conversation. I would really thank Jim to rock the stage together with us, and thank you all. Please try the carbon financing fist bump during your lunch break. It's fun. Thank you. Thank you so much.